MV3 Traders Futures Trade Radio is brought to you by The Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below.
Order filled. Order filled.
MV3 Traders Futures Trade Radio is brought to you by the Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, what's going on? What's going on? How's everybody doing? Hope you had a good weekend. Interesting start to the, get myself out of my ear. Interesting start to the session. All right, yeah, well, to this week's session. But it started out kind of quiet last night, and then we kind of picked up around the London session, and then we just been on a supply run ever since. We've been taking the stairs to higher prices. And it kind of, to me, I see it as a way of that's not the word I want to use. I see it as, a kind of a testament to what they were, in terms of wholesale, how they were playing all of that selling last week. And then to where we had I think it was Thursday, to where we had the breakout from the bottom, like the breaking the bottom to where everybody was expecting, the sky to fall pretty much. And I saw that they used that in a way to collect the last little bit of inventory, trap some shorts, got a lot of, shorts trapped, a lot of sellers trapped, a lot of people with that, complete bearish outlook trapped. And, ever since to me, that whole sequence of events that happened last week and, a few weeks before that, leading up to that, started as a way of them collecting inventory, like overall, like a big overall warehouse of inventory. Now, of course, along the way, they're going to make money on the day, right? So we're not going to just do it all, just collect a big warehouse of inventory and not do anything with it. We still want to facilitate that. We have to, right? And what we want to do in a way that we make money. But there was an overall move bigger than the daily picture or the intraday picture that we're seeing kind of play out now, especially leading up to the bell, to where we're getting rid of our wholesale was getting rid of a lot of that inventory. And you could kind of see that at the open, to where they had to go on a supply hunt at higher prices. So now that took us inside of a shop to where we're between 160 or 1160 and 100. So 1160 and 11100. It's a 40-point range, which is, relative to what we've been saying, that's kind of, it's significant, but it's almost average. And I remember a time when a 40-point range was like insane. This is before the micros were introduced into the index futures. But now it's just a common thing to see a 40-point price print within a 40-point range. My mouth want to work this morning. It's interesting to see price print inside of a 40-point range. I cannot talk this morning. My mouth don't want to work. I'm gonna try one more time. It's interesting to see price print within a 40-point range. There we go. Yeah, those were good times. But like I said before, I kind of like these times too, because it doesn't. So back then you had NQ. You only had you didn't have the micros. You only had the E-minis. So you didn't have as much flexibility. I didn't have as much flexibility with what I was doing, and with the account size that I was trading with, because I'm not working with these huge, and I don't have $1 million to put into the market and the risk in the market, right? So it's just the risk was different. That's the biggest difference that I see because you can switch to micros and you can almost trade these wide ranges like you traded the smaller ranges, back in that time. And you have more flexibility. So wholesale is still, keeping price within the shop. We have a shop, sort of a shop within a shop. We had an inventory lift there at 1180. Coming back to that inventory point. All right, watching it attempt to break down. And one thing that I've seen kind of consistent this morning is what we just now saw. Well, what I'm just now witnessing, to where we went back to inventory with some volatility just to flip that and take it back to supply. Really quick, really fast rotations. So speaking of fast rotations, so I only took like 2 trades this morning. One was I took a loss on the first one, then I had a winner on the second one. But there was way more opportunities, but I ended up like making a change over the weekend, so I had to adapt to that change. So that's why I was a little more, cautious. I needed to adapt first before I actually started being active and aggressive with what I was doing with my execution, before I started executing aggressively like I would normally do. And that's kind of something that I learned over time. Something that I picked up over time is, if I make a change, trying to jump right back into what I'm doing, into the game, and with my real like live capital, or if I'm even trading in one of my funded accounts, trying to jump right back into trading with that new change, usually that's going to end up with me making mistakes. So what I've learned to do was just be a little bit more patient after I make that change. The market's going to be open another day. It's going to be open tomorrow, and then the day after that, every day, Monday through Friday, with exceptions of major holidays, the market is going to be open. And if it's not open, if some reason the market closes down like for good, or just for a significant period outside of what it would normally do, then money kind of that's going to have a major effect on the value of money. And so the fear of what would cause you to have FOMO and to jump into a trade that you really shouldn't be in because you made a change, or for whatever other reason you're not prepared for that moment, that fear of missing out is kind of irrational, because you'll have more chances or more opportunities to do whatever it is that you're trying to do. And if you don't, then the environment that we're playing in, if for whatever reason you get no more chances, what you're trying to accomplish with that, or what you're afraid of losing, is probably not going to have the same value as it had before. So it wouldn't matter to you as much if you lost that money executing when you were supposed to execute, right? Or just waiting and executing to the next time you were supposed to execute. So that's something that I picked up about, so I understood that the last part of what I said, but what I had to learn was being patient after I made a change and not trying to rush back into trading. I can sim trade, I can trade in a simulated environment to get my rhythm back into, to test out what I changed. And to go back full on like I didn't make the change like I was before I made the change, that usually ends up in a result that I don't want. And it's not about the P&L, it's about my consistency and how I show up, with what I'm supposed to be doing as a trader, as a day trader. Another way of putting that is, usually if I come back too soon after I make a change, I make a lot of mistakes. And then it starts to compound. Those mistakes start to compound. You make one mistake, or I make one mistake, and then I start making more mistakes until I calm myself down, recenter, let the dust settle. There's a way I said this before. I can't recall the way I said it before, but let that energy settle down, build a solid foundation with this new way of doing business or conducting my business. And then from there, then I can start to continue on with the mission. And so far, having that, approaching it from that direction or from that angle, that has been working out so much better to where I don't have these crazy drawdowns because I made a change and then I tried to come back too soon from that change. So a lot of times you'll hear this expressed in the form of to don't change your strategy, to stay consistent to your strategy. But as you progress in this and as you learn more and as you grow as a trader and as a person, you're going to, it makes sense to actually make changes, to make adjustments to your strategy. So it's not about not changing or not adjusting your strategy. It's more so about how you go about doing that. I'm not going to say there's a right and wrong way to do it. I'm just saying that you have to find the most efficient way for you to make those changes, or for you to continue on with those new changes, after you make your adjustments to your strategy. And one thing I like to do, so this change was more so about the platform and how I was having issues with, my order executions with a specific platform or with a specific account. But if it's something like, if I'm making a change to the strategy, then what I want to do is I want to backtest that first. And I want to backtest it first. I may even put it in a replay mode and get myself acclimated to that new strategy change in replay mode. Just develop that skill with that new way of conducting business in terms of the strategy. And then in a live environment, the best, most efficient way that I found to do it for me was to sim first. Just to iron out all the kinks, whatever, mental things that I could be having with this new movement. In a way, dealing with the psychology, the emotional state of it, of doing something different, and then that building uncertainty. So now I've created a safe environment for me to acclimate to this strategy change that I've implemented. Right? So that's the difference between if I make a change outside of my strategy versus if I make a change with the strategy itself. That also, if I want to trade at a different time period, so I have my normal time frame, like right now, from 9:30 to 10:30 as my session hour. But if let's say, for whatever reason, now I want to shift and trade. If I want to shift and trade in the afternoon, what I'm going to do is I'm going to use the technique that I would use if I made a change in my strategy, because again, I'm used to trading in this first hour of the New York Stock Exchange open. I'm not used to trading in the afternoon. That's you got a different frequency during that time period. You have a different energy. You got different participants that show up at that time. So I would need to give myself plenty of time to acclimate myself to that new environment. And then once I'm comfortable, I feel like I'm comfortable with this new environment, with this new movement, then I can go and continue conducting business as usual. So as I was saying all of that, Wholesale in a way took the stairs outside of that previous shop, climbed another 30 points. We're starting to see them looking for some new inventory. around 120. Now that's a quick inventory point. We haven't solidified that as a main inventory point yet, or inventory zone yet. And it's interesting to me that we haven't really had any significant retracement. We can kind of, a lot of people would look at, it's reasonable to look at where we set up shop previously as some retracement. But if you zoom out and you look at, let's say, a 30-minute picture, it's just straight up. Like, you don't really see, that's not the type of retracement that I personally will be looking for. But of course that's just my opinion. That's just, how I like to look at this. So eventually I put it this way, eventually I do expect some mean reversion. So either, they bring price back to the mean, or, they let the mean meet price. So one way that I can, a simple way of looking at that is to look at what I call MSRP. And MSRP can be, it's all that is, in trading terms, it's just a indicator that is a sort of an industry standard. So like the VWAP, you can look at the VWAP, and a VWAP will kind of give you a gauge as to it's the right way to say this. Well, okay. So institutions, right, and size participants use the VWAP as a way, as kind of a benchmark for how well, or what kind of how well their portfolio is performing. So what they'll try to do, they're not necessarily trying to trade to or from the VWAP. What they're trying to do is beat the VWAP. So they're trying to make so many points on the VWAP, and they'll just use the VWAP as a reference point when they send their orders in to wholesale. And so you can kind of take that and look at the VWAP as sort of an institutional thing, understanding that eventually institutions will want to beat the VWAP. Well, the only way to know if you beat the VWAP is to see what happens when price makes its way back to VWAP. So that's why the VWAP is kind of one of those indicators where you can always, you don't know how or when, or you don't know the details of it, but eventually price and VWAP will come back in alignment with each other. They will gravitate back towards each other, and you can kind of build a way of looking at this environment, around that understanding that, VWAP has a gravity towards price. Well, price and VWAP, they both have a gravity, and eventually they will come back in the middle, and they will meet back in the middle at some point. So big picture, that's kind of what I'm looking at. And so that wouldn't affect anything, that wouldn't affect how I trade. I would still do what I do, right? So I don't let that affect my the execution of my strategy. It's just something that I maintain awareness of. And a lot of people use that as a mechanism to determine how aggressive they want to be with their strategy. So, you may have it to where if you're closer, just as an example, right? This is not a strategy tip at all. It's just as an example. They may have it to where they'll go heavier when price is closer to VWAP. But if we get too extended or far away from VWAP, if you're trying to, trade away from the VWAP, they will enter a position, or they will take the trigger lighter, or they may just skip it altogether. So now we've set up inventory. I'm just gonna call it 105. That inventory point that I called out before has turned into supply. And we got our supply response right there at 120. Setting up a small shot between 105 and 120. We also have our automation near supply, in the supply zone. We came back to inventory with a bit of momentum. Let's see if we can, if they, start searching for discounts, or do we keep maintaining the shop here? We're pausing in this gap of volume. We are looking for cheaper inventory, which makes a lot of sense based off of everything that I previously talked about. Coming back into another value area, and then I'm seeing a lot of volume. Same difference between, at 1180. So what we did see, I did see it and increase of participation above 1190. Had a spike of participation there. That was, to me, from my perspective, only significant in the price action, or the movement of price and volume. Sort of built a reversal trigger off of 1190. So we know we had some buyers jump in there at 1190. Wholesale is putting the pressure on that inventory zone. Back at inventory. Pausing at inventory. Picked up some inventory there, but we didn't take it far. Actually, we're still picking up inventory. And we could be doing a little bit of budgeting here. Just micro budgeting. Of course, we're gonna have, by the way that printed, you can see it better probably on the 1 minute. It makes sense to have buyers and sellers here, so we have a little kind of a battle between those two components. So now we're just waiting to see which side is exhausted first, and then how far before we have the next battle. So if price continues to, trade lower, I wouldn't expect it to do it, smoothly. I would expect it to do it in a budgeting manner, unless the predator steps in and just, cleans the board off and hit the reset button. So we can start the sequence and the cycle all over again. So I understand, like, that word predator carries a certain weight, but in a way, you sort of need the predator, to give us the kind of market that we want. And I'm gonna let that idea marinate. So speaking of that, on that topic, on that idea, I am going to put that, well, I'm going to put that in a more organized context. And I'm going to put that, so I'm streaming right now on Rumble. So if you're watching on Rumble, I'm going to put that, my view of the predator and the formula that I made around that. I'm going to put that video on Rumble. And of course, I'm just going to share that inside of the Discord. So if you want access to that, you can join the Discord, or you can just go straight to Rumble and look up NV3 Trader on Rumble. The links to all of that stuff is in the description below, but that's one of the videos that I want to work on here in the near future, and I'll make that announcement when I release that video. So before I forget, let me go ahead and mark off my triggers. From a 1 minute perspective, like I had a lot of triggers by the way that I execute now, but just from this 1 minute perspective where I mark off triggers and that I put in the Discord, I didn't have too many triggers in that first. Let's see, 15 to 20 minute period. I didn't get my first trigger until almost 9:40. And that's just, that's because of how they were seeking supply. And if you're new here and you want to know the kind of the insight of how I'm marking these triggers off, just check out the course that I put up on YouTube, the Futures Trading Summer School, and that strategy that I'm using for these triggers is in there. I talked about that strategy there. So it came back to, they brought inventory back to that 1180 zone. And we've just been, they set up shop there. We've just been, budgeting and facilitating orders inside of the shop. We have automation right above us, right at supply. It's still at supply. So they brought price away from automation a bit. And now we're back inside of automation at the supply zone. So from here, of course, price can go in either direction. Price can always go in either direction. It's either going to go up or it's going to go down. Almost makes me want to, hear a lot of times where people will say price is going to go up, down, or sideways. Well, I mean, the only way for price to go sideways is if no one is trading it. So, like, that sideways thing is all a matter of perspective. So if you're looking at it from a, you're a swing trader, even for swing trading, like, there's always an up and down movement within the market. Price never really goes sideways. That's just, if you're looking at that, that kind of tells you the way that it's a indication of how you're looking at this market. And a lot of times, just to be, like, I hear that from a lot of traders who like to take breakouts. So they're looking for these ranges, and for them, that range is a sideways movement. But inside of that range, you have a lot of up and down, and there's a lot of opportunities inside of that range. And I get it because it's difficult. So back in 2018, the strategy that I use now, I saw the opportunities to be able to use this strategy back in 2018. So I saw the opportunity there, but I just didn't know how to execute on it, right? And you won't really hear anybody talking about this, because especially the way that I do it, how to execute inside of the range like that, because most people, they talk about the range, and they talking about breaking out of that range, or something around that, right? But I saw the opportunity. But the hard part about taking the range or trading a range the way that I do is figuring out the risk, right? Unless you have an enormous, amount of capital to trade with, and you can just, take on a lot of risk and sort of cheat in a way. Because again, it takes you back to the first point where the market is either going to go up or it's going to go down. If it's sideways, then the market is, if price is moving sideways, then that means no one is trading it, and then that's a whole nother problem in and of itself. So the only time that price can quote unquote go sideways is when it's closed, because that's the only time that price doesn't move. And even then, when the market is closed, there's still, people are still placing bids and offers and all of that stuff. So the price is still moving. The price is not this. The price movement is not just this random thing that happens. Price movement is based off of what humans think that, or what people think that the price should be for a certain asset. All right, and in futures, we're talking about a derivative of a financial asset. So, kind of to close the door on that other thought with the why I understand why most people talk about the sideways in the way that they do, is because it took me years to figure out, actually to finally figure out how to trade in that way. Mostly because of the risk component. Because in hindsight, it looks simple. But then when you really do the numbers and you go through it, and you're honest with what you're seeing and how you're watching this in hindsight, and how and you compare that all with the manipulation, the opportunity is there, but a lot of times it's not feasible because of just the amount of risk that you have to take on to do it well enough to be consistent at it. And of course, everything that I just mentioned is my opinion, So, trust yourself at the end of the day. So, that with all that being said, that brings us to a good closing point. I'm definitely at the end of my trading window, need to get my numbers and all that stuff. So I hope everybody have a good rest of your session. Have a good rest of your week. And I'll see you on Friday. Trade it easy.